Hi everyone, let's go over my micro Elliott Wave scenario on Bitcoin, where we are still looking for a move to the downside in a wave C in a zigzag 5-3-5 wave structure, where the most common target for wave C is very nicely positioned around that 29k area, where we also have some additional support between 28.8k and 29.1k. In this scenario, the high of B might not yet be in, and what's interesting around the area between 31k and 31.3k is first of all the double top over here, which is like a magnet for price, where price could wick above, close below for a swing failure pattern trade and then a continuation to the downside. But we also have a order block over here that is still untouched, and the 786 and the 886 Fibonacci, which are common targets for a wave B, pulled from the high to the low of wave A. So there is a little bit of confluence over here, which can be interesting, but especially the double top is something that I then keep my eye on. The resistance where price is right now, however, is very important for that continuation to the upside. The resistance area sitting between 30.6k and 30.7k will determine if price can continue to the upside or if the resistance is big enough for a move to the downside. If we, however, look at this structure over here, it looks to be a wave 1, 2, and then a 3 for then potentially a range for 5, then a corrective structure and another move up, and then potentially a zigzag structure, which then is a 5-3-5 towards that double top area. So it is very interesting, and also at the lows over here, hitting the support area that we were looking for, price started to build bullish CVD divergences, and I kept the silver YouTube members up to date in the group, where we saw a bounce and a retracement. We saw some bullish CVD divergences very nicely indeed, and also when price then moved to the upside, we saw bearish CVD divergences coming in play as well, which is the red line, lower high on price, higher high on the CVD. However, I wrote that the first one visible was the bullish one, and the first one that appears is the preferred CVD divergence. So eventually this bullish CVD divergence played out very nicely as price took the high for then this move to the upside, where you can also see that volume is increasing, which gives a little bit more probability to this being a wave 1, 2, then a wave 3, 4, and then eventually a wave 5. So volume increasing in a wave 3 is exactly what you want to see, which therefore also gives me the more preferred scenario of wave B not being in just yet. But nonetheless, as we always do as traders, we are reactive. At least we don't YOLO, FOMO and all that stuff, right? Trying to catch knives. Looking for the reaction over here is important. Sticking to your plan and strategy. Look for your entry requirements, and once all the boxes are ticked, you can potentially look for a short in this area, as it is resistance nonetheless. Just like over here, we had support. You can also see that we did create a double bottom, and that's the reason why I am still looking eventually for downside, either directly depending on the reaction, or going up for B and then moving down for a bigger wave C. Because over here at 3200 we have low number 1 and low number 2, and on the Coinbase chart they are exactly at 3200. It's exactly the same price. On Bybit it's a little bit higher, but most of the charts have not yet taken this low, so potentially going up and down would be very, very interesting indeed. If price would move to the downside, I would look for the double bottom, and if one creates a swing failure pattern over here, like taking the liquidity, closing above and then immediately moving towards the upside with volume, then this could still be a structure like this. But preferably, based on what I see over here, I would be looking for a 5, 3 and then a 5 wave move to the upside. If we look at the CVD divergences, we have bullish CVD divergences, higher low on price, lower low on the CVD, where the target is over here sitting at 31k, which is interesting, right? Because this level is also the double top level for potentially a wave B high and then a move to the downside. We also, however, have bearish CVD divergences, and one can argue that is the first bearish CVD divergences already played out. Over here, lower high on price, higher high on the CVD chart, which I'll show you in a second, where the target is this low, but price created literally the same low. So it's a little bit of like, did it take it or not? You know, like I still have it on my chart nonetheless. And then we have some new bearish CVD divergences with this high, lower high on price, where now the target is that double bottom. So that is why it is so important to have a look at what's going on the lower time frames, because even though on the 15 or 1 hour we have bearish CVD divergences, if on the 5 minute price keeps building locally bullish CVD divergences, the bearish one doesn't matter, because the lower time frame CVD always gets priority over the higher time frame CVD divergence. And over here, when price was rejecting to the downside very locally, we saw a higher low on price, lower low on the CVD, which then made price move towards the upside, taking this high, which is the target. Very nice indeed. If we look at the 5 minutes, so we just zoom in locally, you can also see this. So we had a higher low on price, but we had a lower low on the blue CVD line. It's minimal, but it is there for a bullish CVD divergence. And now you can see the same higher low over here, higher low in price, lower low on the blue CVD. Again, a bullish CVD divergence, also in yellow, by the way. So that is very interesting for then potentially continuation to the upside. If we zoom out, I do want to show you the bearish CVD divergence over here, where you can see this wick over here, this red wick is not in confluence with the highest point of the CVD. So you don't use the highest point, you want to use the CVD of the red candle, which is all the way down here in yellow. And then you can see a lower high on price, but we have a higher high on the yellow CVD, which is a bearish CVD divergence. However, we also have the bigger bullish one, where we have higher lows on price, but lower lows on the blue line over here, as well as, by the way, on yellow, as you can see. So we also have some bullish CVD divergences, with the target being 31K. Now, we do have news coming up once again, and it might be volatile once more, right? At 2:30 p.m. Central East European time, we have some news coming in, seen by the red flags over here. That's the only thing I'm looking for. The orange one and the yellow ones are, for me, not interesting. I literally only look at the red flags. I also have no idea what the news is. I don't follow any fundamentals whatsoever. I just know that red flags might equal volatility. And over here on Wednesday at 2:30 p.m., price did create some volatility, which was over here, right? This candle was a typical news candle over here, wicking to the upside, wicking to the downside, ranging for a little bit before then moving to the downside. So around those news hours and news times, make sure you trade safe. You have a plan in place, you have a strategy in place, your stop loss, everything is set just in case, because it might be very volatile and you don't want to be on the wrong side of that coin. If we then finally look at the probabilities of what I just explained, which is actually one scenario in my video, which is extremely rare as well, but preferably I would like to see this double top taken for a wave B. It does depend on the news and the reaction we get around this area, but I think it would be nice for price to move up, where also again you get some breakout longs, probably people longing over here. They're thinking, hey, we're breaking out, we're going to move to the upside. Very nice, but you're baiting all these people using that liquidity for then a push to the downside, besides also triggering all the stop losses of the shorts that happened inside this range of people thinking that price is moving to the downside. So that then creates the liquidity for the bigger positions to fill shorts and move towards the downside. But the reaction we get over here is very important. I'm going to keep a close eye on what is happening over here, and if anything is interesting, I'll write it in the updates section. So that being said, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.